everyone, and thank you for joining us for this Open Banking Expo panel on central bank digital currencies, or CBDCs as they're known, seen through the wholesale payments lens. I'm Noelle Atchison, Managing Director of Research at CoinDesk, and for this panel I'm joined by three experts who have each done in different ways significant work in pushing forward the understanding of and research into innovation in central bank digital currencies. We're joined by James Pomeroy, Global Economist at multinational investment bank HSBC. We're joined by Segun Bewaji, the Team Lead and Senior Economist at Payments Canada, which operates Canada's payment clearing and settlement system. And we're joined by William Lovell, the Head of Feature Technology at the Bank of England. Thank you all so much for giving us your time today.
Great, pleasure to be here.
Pleasure.
Great to have you here. Now, I've given a very superficial introduction to each of you, but before we dive into the questions, there's a lot to get through. I'd like to hear from each of you a bit more detail about your work in CBDCs. And William, if it's okay with you, we'll get to you last, because I do want to drill down a bit more even into the statement that the Bank of England put out earlier this week on its creation of a task force to look more closely at this fascinating subject. So James, why don't you kick it off? How did you start looking at CBDCs and why?
Yeah, so I'm a global economist, so I've been looking at a whole range of different things over the past few years. I'm sure you can imagine the past year has meant we've been looking at a number of completely different topics we never thought we'd look at. But more broadly, a lot of my work has been focusing on big long-term trends, things that are genuinely going to change the shape of the global economy. And about 4 years ago, that took me on the path of looking at central bank digital currencies. And over the course of the past year, quite clearly, a lot more interest has been gathered across the world, and it's become a topic I'm spending much more of my time researching, writing about, and speaking to investors and businesses to try and explain what they are and what they could mean for the world.
Did you expect to be spending so much time on this topic?
I think at the beginning you probably thought this is going to be big, but the timing and when and how big, this year has been quite a surprise. If you'd said to me at the beginning of 2020, okay, in 2021 we're going to be talking a lot about central bank digital currencies, I wouldn't necessarily have thought it'd be quite so much so quickly, but a lot has changed in the past year in so many different ways, and this is just one of them.
It certainly has, both within the crypto and blockchain industries as well as without. Yeah. Segun, over to you. Why did you start looking at CBDCs? I know that the Bank of Canada is one of the first central banks to start working on this, but what's your journey into this topic?
So I guess we started back in 2016 in terms of just, it was more of an exploration. So the research director at Payments Canada at the time, James Chapman, he was actually seconded from the Bank of Canada. So, and we both had an interest in cryptos and where they were going. So we thought, wouldn't it be somewhat interesting if central banks actually started issuing digital currencies as well? So that was our thinking. And fortunately, at the same time, we had a head of technology at Payments Canada who was interested in seeing if we could potentially manage high value clearing and settlements on the blockchain, just for experimentation and just general research, while it wasn't something most people were thinking about. So that's how we sort of went down the path of Project Jasper and the various phases we've had with that over the years, and which all culminated in cross-border payments experiment between the Bank of Canada, the Monetary Authority of Singapore, and the Bank of England as well. So yeah, it's been an interesting journey, and just one for exploration and trying to understand what the business cases are and potential pitfalls and things you need to think about and those sorts of things. So it's been, yeah.
James mentioned an intensification of the focus on this topic. Have you seen something similar? Are you spending the same amount of time on this as, say, a year ago?
I would say yes, there has been intensification. It's been primarily on the retail side for us, but we have seen a lot more conversations around the general topic of CBDC and experiments or sandboxes being created around the world. So yeah,
Interesting. William, your title is Head of Future Technology. In what way are central bank digital currencies part of the future technology that the Bank of England is looking into, and what else would fall into that category?
Well, I think future technology is a really interesting way to look at it, because one of the things that's quite special about central bank digital currencies is it's a place where policy and technology come together, and actually you need to have an understanding of both for technologists to understand the policy direction and policy objectives, but also for people who are developing policy to understand what opportunities or constraints the technology might give them. What that means for me is that it fills almost all of my time. And whereas perhaps a few years ago, I would spend some time looking at big data or machine learning aspects like that, what I'm finding now is the world of payments and digital currency specifically are just filling all the working hours and some beyond as well.
I totally hear you on that. It is even those of us that spend 24 hours a day, 7 days a week. Okay, I'm exaggerating just a little bit. Looking at the space cannot keep up with the flow of information. Now, William, the Bank of England made a fascinating announcement earlier this week about a task force. It's the first task force at that level that I've heard of, or that I'm aware of anyway. Can you give us some more detail?
Yeah, so it was an announcement by the Chancellor, Rishi Sunak, that basically we're going to have a CBDC task force. So this is the Bank of England working with the Treasury in the UK to coordinate across UK authorities. So this is a really important step, because it means it takes us a stage further towards real implementation, rather than just having interesting conversations. I should point out at this stage, we're not currently committed to an implementation date for a CBDC, and we still may decide in time that now is not the time. But this is an important step forward, and it's also backed up by an engagement forum, so we can start to look at a broad range of stakeholders throughout the UK and potentially beyond on CBDC topics and what it needs to cover. And there's also going to be a technology forum, so we can start to work with practitioners, work with academics about what implementation looks like. So yeah, it's been an exciting week in CBDC, certainly in the UK. There's one other bit that I should add to that as well that's particularly relevant to the topic of wholesale CBDCs, and it's perhaps not been as noticed as much, but we've also announced that we are going to provide what's called an omnibus account. Now, this isn't a teach-in on settlement accounting, thank goodness, but the important thing about this is that it makes it easier for us to be able to connect to wholesale platforms and take that step towards a wholesale CBDC as well. So that's another important announcement that's happened just this week.
There's a ton of threads to pull on there, and we do need to at some stage take a step back for our audience and describe what we mean by wholesale versus retail CBDCs. But to carry on with what you were talking about, the bringing in policy and the technology, I think, is one of the steps that has been generally missing so far in the exploration. It's a sign of how technology impacts something so much broader than just the use case itself. And what do you think might still be missing in this puzzle of bringing all of the stakeholders together?
I think that's potentially different between wholesale and retail. So I'll talk about wholesale first. So I think that the piece that we really had to get right first was getting the use cases right, actually understanding where we can add value, rather than getting all excited about distributed ledgers and crypto and what it might give us, actually saying, okay, what does this give us that we can't already do? And I think that case has emerged in wholesale space probably more quickly and more easily than it has in the retail space. So I think we're very much looking at efficiencies, about where we can remove frictions, where we can unlock liquidity and things like that. In the retail space, there are much bigger questions, because we effectively would be launching a new payment instrument, and we need to understand what impact that would have on the financial system more generally. So a lot more questions to answer.
Yes, including that of identity and privacy and all of those. Segun, can you tell us a bit about what you see the main differences between the wholesale discussion and the retail discussion?
So I think just to add on to what William said, because we've sort of observed that as well. So in terms of wholesale, it's really about I would say, trying to find the value there. So we in Jasper 3 we had an interoperability between our securities trading and the wholesale payments and settlement system. And what we found was that, in as much as you could speed up settlement flows and immediate access to liquidity, you still had questions around provision of credit, because the participants in the securities world are not the same necessarily as those on the wholesale system in terms of clearing and settlement. And also, business practices needed to change to actually take advantage of some of those efficiencies. And the question then becomes, are we willing to go from, the whole process of trade affirmation and confirmation that might take up to 3 days versus, going straight to T, and are people willing to take that risk? Secondly, in terms of retail, it comes down to implementation. There are multiple ways you could implement retail, and you have the hybrid systems where it's a case of all account information are held by the central bank, and they sort of outsource the distribution and KYC to intermediaries. Those could be banks or payment service providers, and they handle the day-to-day accounting. And if one of them were to go down, then the bank could easily switch accounts to a different provider. But again, it comes down to implementation and those sort of questions. So there's a lot to sort of unpack and really dig into and learn about what would be efficient and where the business cases actually lie. So, implementation wise, very different, but ultimately you still have the same questions as to business case and, value to be had from various models.
And both of them extremely complex. James, can you talk us through some of the benefits that you see of the wholesale CBDC concept?
Well, the whole concept of central bank digital currencies across the board, both wholesale and retail, is all about efficiency. And is, can we just do things better? Can we improve the plumbing? Can we update our financial infrastructure using newly available technology? And I think all of that is really exciting, because you're taking wastage out of the economy. So I look at this from an economist perspective rather than a technological perspective, and anything that cuts wastage is good news. Now, if you can save a few basis points here, a few percentage points there, that's great, because that's money that's not been wasted, it's time that's not been wasted, it's errors that aren't having to be corrected, that can be put into far more productive endeavors that can hopefully help to grow the economy more quickly, hopefully help to improve all of our lives. And essentially that's the easiest benefit I think to see is it's all about improving efficiency and making more robust systems. And if we can do that, then fantastic. It's then the challenge comes to the technology to make that happen.
And how would CBDCs improve efficiency? Where would the cost savings come from?
There's a number of ways this can happen. I mean, the easiest way for me to explain this to an audience is if you think about a simple payment. If we go sort of outside of wholesale for a second and go into retail CBDCs, think about there's a cost of transaction attached to everything you do. Be it a cash transaction, has a cost attached to it because you've got to store that money, you've got to count it, you've got to transfer it. If you think about a card payment transaction, there's a card fee, there's middlemen, there's everything that's going in place. There's all these different layers of the transaction which incurs a cost. And essentially, if you can put in a system that means that none of those costs need to exist because you're using far better technology, it doesn't necessarily need to be blockchain, it could be however you choose to design it, then suddenly you're taking out all of those costs. And you're basically just cutting out all of those middlemen, all of those layers, all of those transaction costs that could exist. And that helps to improve efficiency and cut wastage.
So it's about removing the middlemen, saving efficiency, saving costs as well as time, because there's a cost, I suppose, that way. William, do you have anything to add to those benefits that Segun was talking about? Sorry.
Yeah.
One more time.
Yeah, go
One more
ahead.
time. That was James. Apologies. Okay. William, anything to add to the potential benefits of wholesale CBDCs?
Yeah, I was just thinking while James was speaking there, I think he raised some really important points that I wanted to build upon. And that is that there are great opportunities to reduce risk as well as gain efficiencies. So as we reduce error rates or reconciliation breaks, all of that reduces risk as people get a better view of what their settlement position is and their better view of their liquidity position. That leaves them less exposed to the likelihood of finding themselves in a difficult position, and that has to be a positive. And that really comes about through having more accurate data and more up-to-date data. Now, for sure, when we roll out new technologies, risks come with that, and there is always going to be an element of learning those through the implementation. But I think we understand how to do that. Overall, I think there could be some real positives from a risk perspective of this kind of approach.
So it's not just about the cost cutting that James was talking about. You're also hinting that this would be an improvement in liquidity, which would increase flows, potentially also increase economic activity more broadly.
Absolutely. I think there are a lot of opportunities here.
And you mentioned risks, downside. New technologies have them. What do you see as the potential risks of such an implementation?
Well, we touched on that. So some of it is around the straightforward technology risk, something new that is less well worn, less practiced. One of the advantages of more conventional technologies is it's been used all around the world. The bugs have started to be found and they've been ground out over time. So we'll inevitably have to go through that process. And it'll be a little bit more difficult this time because we are more reliant on these machines and they're more critical than perhaps they were even 5 or 10 years ago. We also need to think about the structure of new entities and more operational risks that those have. But what I think is this is an evolution of something we already understand about financial market infrastructure. So we have a basis to start to use the way we think about how those are set up, how we do the risk management, and evolve that towards. So there's a roadmap for how to do this. That's not to say that it's risk-free, because change never is. But I think there's a very positive way to think about it and evolve what we already have.
And also a ton of resistance to change. Change is pretty scary, and it's not like we're talking about changing the wallpaper on our desktop. James, do you see any risks that we haven't mentioned yet?
I'd echo a lot of what's just been said. I mean, whenever I start talking to a lot of colleagues internally who aren't looking at the subject as closely as I am, and we would start talking about it, the first question that always comes back is, why bother? Essentially, is it worth it? Am I really going to notice any difference? You're talking about these benefits. They don't seem that great, but surely you're ripping up all of the plumbing. That carries a whole load of risks. And as William just said, a lot of these technological risks that are out there, and people don't like change. So I think the risk is not just about things going wrong, but about there being resistance to change that could slow down progress just because of how cautious people are about what could be quite substantial changes. But yeah, definitely those same things come up in a lot of my conversations.
We haven't seen yet a full implementation of the wholesale CBDC concept. I know that there are some retail CBDCs out there. The Bahamian Sand Dollar comes to mind. But is anyone close, in your opinion?
Is that one to me? Sorry.
Yes, that is James.
Sorry. There's clearly quite a lot of projects out there that are progressing quite nicely, and I'm sure my two fellow panelists will have a lot more insight in terms of their economies, how progressive their economies are. But there's also big steps being made on the wholesale space, and in Singapore has been a leader in this space for some time. And then, of course, on the retail side, everyone's fully aware, firstly of the Sand Dollar project, but the Chinese ECNY, or however its changing name ends up being, those projects get a lot of the attention. And I think the retail ones get the attention because they're the ones that people can sense themselves. Not many people are involved in wholesale banking infrastructure, and a lot of people are involved in payments. And I think then you suddenly start to get a lot more attention gets made on the retail ones, when on the background there's a lot of wholesale projects that are going on. They're just all at very, very different stages of their development.
Interesting. And Segal, a question for you. Do you see the wholesale CBDC concept totally replacing the traditional rails at any time within the next decade?
So to echo James's comments about projects being at different stages in development, I would say, and just from what we've learned from Jasper, our road with Jasper and Jasper Ubin, I would say in terms of wholesale, the first thing would probably be with cross-border payments. So that would be the easiest thing to tackle with wholesale. When it comes to so that could be done within the next 10 years, say, potentially. But in terms of other things on the wholesale side, there's going to be a lot of learning. I mean, it's not just about clearing, positions on the books of a central bank, but also interconnecting those settlements with other aspects of the capital markets, for instance. So, like I mentioned earlier, there's securities trading, there's derivatives, there's credit extension, and so many other things that need to be contemplated when thinking about rolling out a CBDC on the wholesale, that just makes it a lot more of a complicated thing to roll out. So for the full implementation, I think we are probably a long way away from that. We have a lot to learn before that. Whether where certain aspects of the financial markets are willing to take that risk because they see the efficiencies there that they can take advantage of early, it might lead to certain aspects coming live before others. But I would say we're still a long way away from that.
Yeah, and there certainly is a lot at stake, as you hinted, William, pulling on something that Segun said, the need to focus, one of the focuses being cross-border payments. That implies the need for different jurisdictions to work together. Is that something that you've been looking at?
So that's certainly something that the bank is involved in. So there's a lot of work going on at the Bank of International Settlements and also through the FSB working group to actually bring people together and look at the different building blocks that are required to get cross-border payments, get more efficiency into cross-border payments. And I think it's worth remembering, there's, from a technology perspective, there's a lot we can do, but we can't do all of it. It's not like an email system where you just plug it together and then the messages start to flow across. If only it were. There's a lot that can be done with data standards. There's a lot that can be done with messaging standards and more consistent data. But ultimately, you need to also think about service levels, legal agreements, and fundamentally foreign exchange. If you're going from one currency to another, there's some exchange rate risk there that somebody needs to take, and whoever's going to take that, be it a correspondent bank or whoever, they're going to expect some sort of return on having taken that risk. So while there's a lot that can be done, I'm certainly not defending the current state of cross-border payments, but whilst there is a tremendous amount that can be done, I think imagining a completely global, seamless setup, well, that's certainly a very, very long way away. But imagining something that is a step forward from where we are, and perhaps quite a large step forward from where we are, is a lot closer.
So focusing on the technology for a brief moment, are you thinking more of one global blockchain system that all jurisdictions can onboard onto, or are you thinking of different national systems that are interoperable?
I don't know if I necessarily see those as different things. Rather than just sort of trying to imagine what the technology would be, I think we need to understand the problems that we are trying to solve. So, for example, we're in the process of replacing the UK RTGS right now. And we're cutting code on that right now. When we started that program, we looked at actually whether we should do the whole thing on blockchain. And we decided, and this picking up on some of the points we spoke about earlier, we decided actually there are a lot of the things about high value payments and interbank settlement that you don't need a blockchain for, that a conventional tech approach would be fine. But what we realized was we needed to be able to interface with this. So as the demand starts to grow, and as the solutions start to grow, then you can start to build technology that solves those problems. So rather than sort of trying to imagine a big global system that's going to sort everything out, I think we really need to understand what the different frictions are, and what the different demands and requirements are in different corridors and different places.
Speaking of frictions, James, what do you think are the main obstacles to the progress here?
Just sort of more broadly, I think, firstly, I mentioned earlier some of the sort of unwillingness of people to go down this path, and a bit of slower safety first maybe is probably the best way of putting it. That's going to be one of the key challenges. The second is going to be actually making sure the technology works and is as good as you can get. We're in a very difficult period, I think, in terms of investing in new systems, where we're in a global technology boom, and I mean that in terms of development of technology. You know, things are improving every single week in terms of what the capabilities that we could have designing a payment system, designing any form of technological system. But at some point, you've got to make a call of what you're going to build and how you're going to do it. And there's also then a whole load of questions that central banks are going to have to answer around central bank digital currencies, even once they've thought about the technology aspects. You've got to think about the qualities that a central bank digital currency has, and those questions are going to take a long time to work your way through. And you're going to see different central banks who are going to be willing just to go for it and to throw something into the wild and see what happens and see what works. Others are going to be more cautious, and they're going to sit back and see what works elsewhere. And I think what we're going to see is a lot of the smaller central banks across the world be much more willing to engage with this quickly and early, and those lessons are going to be really important for the rest of the world. And that's why I spend a disproportionate amount of my time looking at what's happening with Sweden's Riksbank. I think is going to be a really fascinating case study for the rest of the world, because you've got a developed market central bank, G10 currency central bank, who's well ahead of a lot of the world's major central banks on this. And as a developed market, it's much more likely to have the same challenges as the Bank of England or the Bank of Canada or the Fed or the ECB. And therefore, there's going to be some really powerful lessons that come from them. But they're just earlier at the stage. So then if you're one of these other central banks, you almost have an incentive to sit back and go, well, let's just see what happens there and see what works and what doesn't. And that in itself could slow things down, just because there's so many decisions to be made. You want to make sure you're making the right ones.
That's a very good point. Let someone else sweat it out, right? And what about James?
Yeah.
Back to you. What about some of the emerging markets? I mean, the ones that have less of a legacy system to overcome, the ones that already are more digital. Do you see some of them perhaps overtaking some of the more developed nations in this progress?
You could, to a degree, and I think it's because there's a greater incentive to do it. One of my arguments I've been making as an economist for the last few years is that getting people away from cash and into digital payments could unlock so much economic potential in the world. It is unreal. We're talking about enormous multipliers to growth that economists can't even quite comprehend, I don't think, in any of their forecasts. Cash is a problematic thing, and bad infrastructure is a problematic thing. And I think if you're a central bank in an emerging market with a high cash usage, with old financial infrastructure, you have a huge incentive to invest in developing central bank digital currencies quickly and effectively. Because if you can streamline payments, if you can streamline processes, if you can streamline all of these things using central bank digital currencies, you can digitize your economy far more quickly than you otherwise would have done. And that carries so many economic benefits and the multipliers that come with it, that the incentives are just so aligned for emerging market central banks to throw themselves at this. Whereas if you're a big developed market, you can so some of the discussions we've been having say, well, there's a risk involved, because what the current system's sort of fine. So what happens if we sort of get rid of it and it all goes wrong? Whereas if you don't have those systems to begin with, or you have very low quality systems to begin with, it's worth taking the risk. And actually, we could well see some of the smaller emerging markets make big leaps. And you've seen this with the Bahamas, you've seen it with Cambodia, and it's going to be really interesting to see how quickly some of these smaller emerging markets take this on.
And James, do you see private stable coins, for instance, the private version of digital currencies, being a motivating factor in pushing forward some more CBDC progress?
I think they're going to play a key part of it. One of the big questions for me in the coming year, 2 years, however long it's going to take, is how quickly the world gets on board with stablecoins. Theoretically, they're fantastic. You've got something that provides you with a very efficient means of payment, particularly cross borders from one person to another. And they could be used in a lot of different systems for payments in emerging markets without developed payments infrastructure. They could be really, really popular. They tick all the boxes for something to take off. At the moment, there's a lot of hesitancy out there, though, because you're essentially taking credit risk by putting your money into a stablecoin. Essentially, it could just disappear tomorrow. It's unlikely in many cases, but it could. Whereas if you start to see some of these projects that are backed by bigger companies or networks of companies, then what that could mean is a much greater adoption of stablecoins. And that may play a role in almost hurrying up a few central banks, because suddenly you've got a very, very good means of digital payment. That means that, do you want to keep those payments sort of within an ecosystem you're in control of? And that could help to accelerate some of the progress from central banks. But a lot of it will come down to how much adoption there is for these stablecoins, not just their development. And I think that's going to be a really fascinating place to watch.
Certainly, they are today, as you mentioned, used extensively in crypto asset capital markets, but there is a chance that they could start to spill over into some of the more traditional capital markets that you touched on, Segun. You mentioned the CBDC wholesale aspect being used to improve the current settlement system in capital markets. Do you see that as being perhaps the more less risk averse application rather than cross-border global commerce payments?
So I think it would come down to regulations right now. So to the points James made earlier about hesitancy and people not wanting to take the risk, the banks are actually quite heavily regulated at the moment. So, would they? Is the desire to go to a stable coin or even a CBDC there, given the fact that they would have to answer regulatory questions from how they actually use those assets as well? So, I think it's going to be an interesting situation for sure. Whether they are like I said, whether people are willing to take that risk is a different issue, because it's not so much the traders willing to take the risk, because as part of their day-to-day, that's their life, they take risks. But it's the back office, it's the compliance, it's the legal teams, and so on. And are those people willing to actually expose their institutions to those risks? So there will be conversations internally that need to happen with these markets. So it's hard to say, essentially.
It certainly is, and capital markets are changing so much in so many ways anyhow. When it comes to reaping some of the benefits you spoke about earlier, though, Segun, network effects would be very important. And how do you think that might roll out? One of the benefits being ease of transferring funds, central bank-backed funds, anywhere in the world, but only if there's somewhere interesting to transfer them to. And the capital markets efficiencies, again, would need broad capital market participation. How does one overcome a barrier like getting global consensus on this kind of a change?
I feel money, really, as we know it, is an accident of history. So historically, what has happened is states have been able to amass the large quantity of contracts within their geographical boundaries and ultimately their economies. So they've been able to determine what acts as money in the technology that acts as money in that setting. Now, if you have a network such as Facebook's or any of the big tech where they reach billions of people, then you're able to find other people within that large network that are willing to accept those. So I think the question becomes, will central banks understand the need to work together to actually allow interoperability within their jurisdictions, and so actually permit access for foreign direct investment, for instance, without the frictions. And those are policy conversations that need to happen at places like the BIS and the FSB and so on. So it's going to be interesting. Those conversations need to be had at the policy level, I feel.
That's one of the most interesting things, one of the many interesting things about this particular concept, the overlapping, as we talked about earlier, of the technology with the policy, with the economy, with the identity, with the privacy issues. And the deeper you go, the more interesting it gets. But over to you, a question about, to do with the network effects, but also to do with the risk that we were talking about before. Wholesale payments are digital anyway. So really, what is the big deal about the change? We were talking, Sigmund was mentioning, as well as James, some of the big changes that we would have to understand as individuals if we were to lose cash and replace that with a retail central bank digital currency. But in terms of wholesale payments, everything's digital anyhow. So do you think that might even remove some of the obstacles of fear of change in its implementation?
So I think the thing about wholesale payment, in fact, and this is largely true of almost any payment, is that it is at the most 50% of the story. So if you actually look at a wholesale payment, if you're a tech nerd like me and you go and look at the data structure of it, it's telling you about which accounts you're using. It's telling you about the value. It's telling you about value date and stuff like that. The other data about what's going on can be quite minimal. It's often, it needs to be enough to be compliant, and it needs to be enough so that the person receiving the funds knows what to do with it. But it's a very, very practical focus. It's not telling you necessarily the whole story. And I think one of the key things about using distributed ledger platforms and then bringing central bank money onto those is you can start to have really true delivery versus payment, where you can see both halves of the story, and this joins up with capital markets. And this is where the benefits come, and this is where the risk reductions come. Because when you start to think about, if you think about a payment just as a single payment, you just think, well, that if I'm buying some securities or whatever it is, well, how difficult can that be? I can look at the payment going, I can look at the securities moving. It's obvious, but of course, the issue really is the volume. And the volume is growing all the time. And then when you've done tens, hundreds of thousands, millions of transactions, and you're transacting at tens, hundreds, billions of pounds in value, and then something doesn't add up, suddenly you've got that needle to go and find in the haystack. And it's addressing that kind of problem where really those benefits come from. So yeah, even though it's all electronic, what it really is an automated version of the paper system. Most of what we do today, it can be quite slick, but it's an automated version of the paper system.
And the system hasn't really had any significant innovation in a very long time. Looking at the flip side, though, some of the transparency that you're hinting at, what about the ability of governments to better track where payments are going? In other words, to better enforce capital controls and other restrictive measures?
So I'm not 100% sure what you're asking me there.
I'm asking you about the flip side of the efficiency. The transparency is always a double-edged sword. It's good when you actually have the control over the data. It's not so good if you're trying to impose greater restrictions on the companies in your system.
Sure, but I think as Sagan was mentioning before, particularly in the wholesale space, we're talking about a highly regulated environment. So we're talking about a group of companies who already operate under a set of regulations that is, if you compare the banking and finance industry to other industries, it already has a lot more around it. And I think there's also a general understanding in that community that regulation is necessary, because it's not reasonable to expect ordinary people to be able to understand how companies are being run. Even if you had the expertise to do it, you probably didn't have the data. I think the privacy aspects and data aspects of a retail digital currency, obviously that's a very, very different discussion. But in the wholesale space, I think it's worth remembering we're operating in a regulated environment where there is already a lot of compliance and actually a good level of understanding of compliance. For sure, we'd all like it to be a bit cheaper, but I think we all recognise that it needs to be there.
Absolutely, and such transparency could be a powerful tool in helping to combat financial crimes such as money laundering and terrorism financing, and in so doing, reduce the costs of the financial institutions that have to take care of these kind of things. That's an interesting point. James, we only have a few minutes left, so I'd like to step back and look a bit at the recent history. What has really changed in the story around wholesale CBDCs over the past 12 months, which is also a veiled way of asking, has the pandemic had any impact on the investigations going on?
I think it has, but it's been twofold. One is that you've had on the payment side, which does then matter for central banks waking up to the broader concept of central bank digital currencies, have gone massively more digital during the pandemic as people have been nervous about using cash. And that's clearly changed the whole way we think about money, the way we think about digital payments, the way we think about digital financial infrastructure has changed. We've also gone through a period where the whole economy from top to bottom has digitized in a way that we never thought was possible. We're all shopping online much more, so many of our transactions are digital, we're doing all of these things. And it sort of comes in time with a sort of upgrading of the world's digital infrastructure more broadly. And I think you've had a whole combination of things that then are feeding into that. So the upgrading of people's sort of realization of how good the digital technology needs to be when we use it all more, this payment story, and of course the improvements in the underlying technologies themselves that make this sort of development much more plausible. And I think that's the thing that I've noticed much more has changed from central banks talking about this over the past year, is one, they've woken up, and secondly, they've said, actually, previously we said the technology was nowhere near good enough. Now we're saying it probably is. And I think that actually those two things have really changed the landscape, and it's got a lot more central banks interested in the space, both wholesale and retail. And clearly now the ball is rolling.
That's interesting. William, what do you think has been the main driver of progress over the past 12 months?
I think, building on what James was just saying, I think it's made people think differently. We've seen what disruption looks like, and we've seen that it's not necessarily something to be feared. But also, if you take something like a use case like, dispersing crisis payments to people. Now, I don't really think that is the killer use case that tips the balance for a CBDC. However, what it did do is make people think about, actually, maybe a CBDC does do something that we can't do in the current system. And the more people that are thinking that, and the more of the time that they're thinking that represents progress. So I think, overall, it's definitely an acceleration.
And also, to paraphrase G.K. Chesterton, when the current recipes no longer work, might as well find a new recipe, right? And we can all agree that so much has changed over the past 12 months. Segun, in just a few words or less, what do you think has been the main driver behind the progress that the Payments Canada has made on this topic?
So I think for us, it's more sort of trying to educate the public, because clearly the Bank of Canada is looking into the retail space like everyone else, and it's really about trying to ensure that the public is aware of potentially what a CBDC could be, what it could look like, how they could use it, and potential implications. So, for us, we're not so much hands-on with the retail CBDC, which has really been the primary driver through the pandemic, but more just the education, because people need to be aware of it. We sort of need to, ease people's fears of, the question you raised earlier about the flip side to the information being out there. Well, as a private individual, do I necessarily want the government knowing what I do with my money? So it's just having that conversation with the general public, the education, that's been our focus at Payments. And we leave the technology to the bank. And so
That's a very interesting point. Education is, as with everything to do in the cryptocurrency, crypto asset and blockchain space, key. And it's something that is ongoing all the time. And it's something that we hoped we helped with in this panel. We're now going thank you very much for the panelists. That was fascinating. We're now going to open up for some audience questions. Okay, now we're going to move right into the question and answer section. And thank you all so much for sending in your questions. We have so many really thought-provoking ones. So since we have quite a lot to get through, we have a few minutes left, let's dive right in. The one I'm going to start with is this. And William, I'm going to throw this one to you. Most of discussion on retail wholesale CBDC is on the DC part, the digital currency part. What about the CB part? Why do central banks need to be issuers of digital currency?
So I have to justify my existence in 2 minutes. Okay.
That's the letter, yes.
No, that's fine. So I think that Bitcoin shows us that actually you don't need a central bank to issue currency. But it also shows us what the shortcomings are if you don't. So there is something called systemic risk, and that is a risk that exists across the entire financial system, that each of the actors in it responding to market forces don't necessarily bring about an outcome that is good for everyone. Now that's quite an abstract way of describing it. But if you think about what the role of a central bank is actually about, is removing risk from the system. So it's about setting interest rates so that people can understand inflation and make investments knowing that prices are not going to be swinging around. It's also about understanding that risk in the financial system and understanding the way, making sure that banks are safe places that people can put their money and know that it will be there when they come to draw it out. The way we do that is through central bank money. We provide central bank money for settlement, so banks have risk-free settlement. We also pay interest on it so that people can understand, so we can control inflation and then people can understand how they make their investments. And as we've seen in the pandemic, sometimes a central bank needs to take action when actually market forces alone are not going to bring about the right outcome. So for sure, you can have algorithmic or different groupings, a way of people doing that. But if you do that, you then get a tremendous amount of risk. It's about taking that risk out. So I think that's why having a central bank digital currency is important, because we can actually do those good things, you know, trying to track inflation, trying to address systemic risk, but we can also do it with a product, a digital currency that people actually want to use and people can use.
We have mentioned earlier, and William's still staying on you for this, we mentioned earlier some of the private stablecoins that have been coming out. Do you see them as being able to compete with central banks in terms of users' trust going forward? Does it depend on the central bank in question?
Well, this gets to the entire topic of trust in money, which is, I think, a whole panel session, if not 2 or 3 in its own right. I think there are different stable coins. At the moment, mostly what we're seeing them used for is on-ramps and off-ramps for CBDC trading. Obviously with Libra, or DM as it's now called, we're starting to see that make a move into the retail space. The degree to which you do it, I think, is partly about trust and the platforms that those currencies appear on, but also partly about usability and functionality. Which problem does it solve? Does it do something for people that they can't do at the moment? So there are quite a few variables in the adoption of stablecoins, I think.
Awesome, thank you, William. Segun, here's an excellent question that I'm going to throw to you. The Monetary Authority of Singapore has recently published an approach to multi-country, multi-currency CBDCs. What are your thoughts on that?
Okay, so I would say it was inevitable. One of the things I found really interesting a few years ago when I attended a training session at IBM's campus in Winchester was that in conversations in conversations with people there was a sense that IBM were pushing their Hyperledger blockchain to be this sort of blockchain of blockchains, and you would have organizations implementing their business models upstream and downstream on the Hyperledger through RESTful APIs. And, it would be a case of connecting to that. And we've also seen in the space of just general cryptos where you've had the emergence of these decentralized exchanges and you have atomic swaps and so on. So to me, the notion of, the Monetary Authority of Singapore trying to bring, multi-currencies and multi-country transacting together, it's inevitable. It's something that's needed, and it's just really a continuation of what we currently have in terms of trying to build that interoperability between the various networks within the economy. So I think it's inevitable and fully support it. But these are obviously my opinions and not those of Payments Canada or anyone else.
Well, you're right that it's interesting, and Sigmund, staying with you for a moment, it's interesting that this came from the Monetary of Singapore, because Singapore is one of the FX capitals of the world. It has so many currencies pass through there, and huge quantities because of the global trade that the port is accountable for. And I know Canada has also been working on some, we talked about this earlier, some cooperation explorations about central bank digital currencies with other regions. And so you would have an insight into how multi-region, multi-currencies can benefit both parties more. The sum is greater. The whole is greater than the sum of the parts, I think is what I'm trying to say. When you say it's inevitable, how are you thinking that some of the other central bank explorations that are going on will be brought to the table of these programs that are being designed?
So, to that, again, this would go back to points mentioned earlier around, the fact that central banks and jurisdictions need to come together and actually have conversations around, what parts of the economy they're willing to have exposed to others, and even understanding ways to protect themselves against any sort of concerns they might have. And so, we currently have cross-border payments. Central banks probably don't want the private sector to fill that gap that might be left exposed once people start using digital currencies. So it becomes a question of not so much economics, but realpolitik at that point. So that might actually be a driver to force or encourage that cooperation between central banks.
That's interesting, and that segues very nicely to the next question from the audience, which I'm going to ask you, James. Asia seems to be forging ahead with analysing interbank and wholesale projects, according to a recent PwC report. And I actually was reading that report, coincidentally, this morning, and it is true, the top 3 projects in terms of maturity of interbank CBDCs are from Thailand, Hong Kong, and Singapore. James, why do you think Asia is leading the pack here?
Well, it adds a little bit to what you've just been discussing. That actually, if you look at Hong Kong and Singapore, they have probably the biggest incentive to invest in this sort of technology because of the amount of transactions that go through their financial systems, of cross-border transactions, most clearly in terms of those currency trades, in terms of a lot of financial activity going through them, and therefore there's a huge incentive to invest in this technology to streamline those processes, to make sure you can work cross borders, and that's why those economies are sort of leading this on an international basis. It is interesting as well, though, if you look beyond the 3, that actually none of the other top 10 are in Asia. So while there is sort of these big Asian leads who are getting a big sort of pull on this, driven by Hong Kong and Singapore, it is actually a global story where we've got central banks all over the world really pushing on with what they're doing in terms of wholesale CBDCs.
And James, staying with you for a second, I was surprised to not see China in that list. What do you think that's attributable to?
I think on China's side of things, the development has been much clearer on the retail front than the wholesale front. I think that's where their biggest concerns are in terms of payments, and therefore on the sort of wholesale side, there hasn't been the same push as you've got in some of these other economies where there's a much greater sort of financial markets infrastructure story where the benefits are greater for those economies than they are in China.
I love how you're all setting up these wonderful segues for me. This segues really nicely into the next question, which I'm going to ask you, William. Can you describe the relationship between wholesale and retail, CBDCs, in an operative model that benefits economies?
Yeah, I mean, they are quite separate things, but the distinction has probably only become apparent quite recently as the projects have developed. I mean, wholesale CBDCs are really about solving the wholesale payment problem, and solving the wholesale payment problem is actually about liquidity. It's about moving the money around as quickly as possible to settle the maximum amount of transactions and keeping that settlement risk down to a minimum. Now, the benefits to the consumer of that are really in more competitive products, cheaper products. It's not things that they're going to see directly in their hand. Whereas with retail, this is much more about functionality and features, things that you can do that you couldn't do before. Again, that might be for the consumer themselves, or it might be something actually for small businesses, merchants, and retail businesses and things like that. So in that regard, they really are quite complementary. They're not, I wouldn't say, competing. And likewise, the kinds of solutions that we're going to see, the way that technologies are deployed, and the benefits that we're actually seeking from them will look very different.
Yet another wonderful segue, thank you. James, question for you. I think you'll have fun with this one. The largest benefits for society seem to come from retail CBDCs, as William was talking about. Are wholesale-only CBDCs any more than an intermediate step?
I think what William just said is completely right, and it's wrong to think about them as an intermediate step. They're almost like a slightly different product with a slightly different use case that solves a different problem. As we were discussing a minute ago, in terms of China's development, has been very much on the retail side, and before the likes of Hong Kong and Singapore on the wholesale side, because that's where the benefits can accrue much more greatly in those economies. And so they're not necessarily an intermediate step, but learnings in terms of the technology and how these things can work on both sides can help inform the other. Not perfectly, but it's still about learning what is possible. So you have to think them as almost separate, but they are interlinked in many, many ways, just not necessarily you do a wholesale, then you do a retail. You can do it the other way around. And we've seen across the world, you've had a lot of economies issuing retail CBDCs without having done any work on the wholesale front. And you've got other economies who are far further ahead on the wholesale front without even focusing on the retail side. So intermediate steps are probably the wrong way of thinking about it, but there's a lot to be learned from the process of developing these things on either side.
And very different end games for both. Segun, we only have a couple of minutes left, so a quick question for you. Which do you think is more complicated to implement, the wholesale CBDCs or the retail CBDCs? We talked earlier in our session about which we think will come first, but which is more complex?
So they have their individual sort of complexities, but I would say just because of the large scale of the wholesale, M3 is significantly, in terms of money supply, significantly larger than M1. So I would say trying to get all those markets together to work and interoperate together will certainly makes wholesale definitely more complicated to a thing to look at and contemplate. So.
Okay, well, thank you. And thank you all so much. Thank you, the audience, for these questions. They really have been fantastic. Thank you, my panelists, for your thoughtful answers, for your participation in this session. I hope that everyone who's watching can take away some of the ideas that we've spoken about today and how building on them is going to create an entirely different type of financial system that will be fascinating to watch evolve. Thank you all so much for joining us. And now on to the next panel.